All right, guys. I think you guys can hear me loud and clear. Welcome. Thank you very much for attending this webinar. We'll have loads of webinars coming up. So, firstly, would like to welcome you guys. Say thank you for attending my webinars as well. This is um, from Bretton Academy. You can actually search on Bretton Academy on Facebook. And I'm here today to actually share with you a market outlook, a Monday's market outlook by Bretton Academy. So there's a couple of things to share with you, and I want to make sure that you guys are well equipped with the trend knowledge so far. So we have seen the week getting into quite a gear with low inflation. We've got stimulus, we've got the vaccines up, and there is something called a reflation. You guys probably heard of inflation, recession, but there's something called a reflation that is going on at this moment of time. So we'll take a look at a couple of pairs that I would suggest trading this week, because picking out the right pair has always been a very big challenge, and we want to actually firstly know the trend and then pick the right pair that has got that strong trend. So I use a few tools, and one of the tools I've been using for quite a long time is this live Forex early warning feeds that gives me a heat map like this. So here you've got two columns, and these two columns are made of the Asian session right here and the European session. So this usually helps me to do a trend analysis first, okay, before you enter the MT4 or your MT5 platform, before you draw anything on a technical analysis and all that. It's always good for you to do firstly a market analysis, just to know what's going on in the market, stuff like that. Like, for example, it is a risk asset, a risk type environment, risk on type environment, and now turning into a risk off environment, for example. That basically means that there are more buying into safe havens like gold and everything else. So there is a bit of a low interest in buying US dollar as well. So that actually is giving us some room on gold as well. So knowing the risk on risk off environment is your market analysis. So usually traders get a little bit confused, and they think that they have done a market analysis when they go straight onto the chart, onto your technical analysis, and start drawing all the trend lines using Fibonacci, using your EA, your expert advisors, and all other indicators and stuff like that. That is on the technical analysis side of it, which is actually very different from conducting a market analysis. So usually in my experience, if you want to actually have a consistent type returns on your trading, and for those who are trading full-time, they want to actually trade part-time but earn a full-time type earning, you need to actually do three categories of analysis. You need to start off without switching your MT4 or your trading platform on. You need to do a market analysis first, just to know what's going on in the market, whether it's a risk on environment, risk off environment, what are the risk events that are actually happening in your economic calendar as well. These are all your market analysis, okay? Then after that, you would need to go onto a heat map like this one here, and this is for you to do a trend analysis. So your market analysis is an overall picture of the market, whether it is driven by politics, geopolitics, economy, economic events, and all kind of stuff, okay? Data releases and all that comes under market analysis. Then when you come to a heat map and using a tool like this, whether it is a heat map like this, or if you are more familiar with the currency heat map on actionforex.com, which is actually free as well. Whether you are using this or both would be better. You always want to compare and don't rely on one heat map only or one tool only, because if that website crashes, then you are stuck. Okay, so you need to actually always understand that you need to have backup always. Even though things are going really smooth and everything is just nice and rosy at the time, doesn't mean that it's going to be nice and rosy all the time. We always will have to have a mentality to be ready for risk. If it crashes, if the website don't work anymore, or when the performance of that website for the tool that you are using doesn't work as good as it used to be, what do you actually do? What are the tools that you can rely on? This is very important for you as a trader to realize and have that mentality, so you don't crack under pressure so much, and then it might actually impact your psychology of looking at the market clearly. So here I've got my heat map right here, and this is when I'm doing a trend analysis. So the market analysis, I've given you a little bit of an idea, and we'll look into the what do you call that? The economic calendar together as well, just to get an idea of which events, high impact event that can actually, what do you call that, impact this week's trading as well, okay, offering you high volatility. So for those of you guys who didn't realize why Australian dollar today moved a lot, and also on the upside, and together with New Zealand dollar. Now there has actually been something that has been going on behind the scenes, not actually given traders a lot of clear or clarity in terms of news when it comes out in the news and all that, is the situation with the copper. Copper and a lot of precious metal, not gold. We are talking about industrial metal. They have actually been in demand since 2-3 weeks ago, mainly last week, mainly because all the factories in China now has started to go into gear. Okay, so they are actually manufacturing going into normal now, and their biggest buyer of all the products, most of the products from China, is Australia. So Australia is actually supplying a lot of copper to China, and basically China is producing that and selling that back, finished products to Australia. So hence the reason you see that Australian dollar is going up, the Chinese yuan is going up, and then we've got a lot of movement on Australian dollar as well, mainly because we had a big manufacturing data, PMI, okay, purchasing manufacturing index, which was released on a Sunday, which was yesterday. So that actually gives some negativity right there. But then what is most important is that it created volatility. But despite not very positive, we can say that it's reasonably okay, because from consensus figure it actually went down a little bit. But I don't usually see the numbers right here. I just look at the overall PMI. Now the overall PMI, let's say, what you need to understand is that when you look at PMI or anything, CPI, PPI, whatever that is, and you don't actually know what it is, you just can look up Google and read a little bit of what it is, what it stands for, but you don't need to read too much deeper. But what is most important is that the PMI right here is connected to employment and connected to the Federal Reserve interest rate decision making as well. As you can see, this is the rate kind of, I made this one here for Argus FX long time ago, and basically I still use this diagram to give traders an understanding that when you hear about PMI, when you hear about NFP, when you hear about any data, economic data, you need to connect that data with another data. So like here, if it is PPI, you need to look at CPI as well. Was the CPI negative, positive? Like here, the PMI, right? So the PMI for China was yesterday, let's say, and it is connected to the, what do you call that, the Philly. Philly here is Federal Reserve interest rate decision in the US. So imagine that the PMI does actually connect as well with what goes on in the States. Okay, it impacts because of the economic relationship between the countries. So it is really important for you to understand that, but we will feed you with a lot more information on how you can actually use this practically. Okay, not just for your information or knowledge purposes. You need to understand how to use it practically for your trading today, this minute, this hour, because some of you guys are trading, let's say intraday, some of you guys are medium term, some of you guys are scalping. So we need to understand what moves the market, of course. Now, for the whole week, we can see that Monday has got, today, for example, has got mostly Euro and USD, but mainly USD is actually having a clearer trend. That's why we want to know not only that the economic calendar is moving or might actually be moving from a volatility perspective for both USD and Euro. We need to firstly understand which of the two gives you a clearer picture in terms of its trend. Then you can pick the right pair for it. Okay, so I want to show you later on, once we get onto the chart, then we can actually confirm the trend a little bit better. Okay, so for the whole week, we can see that it's going to be quite heavy in terms of data. We're going to see a lot of volatility for certain currencies, especially. But we can see that because it started off the Monday with a leftover of data from China. China's data yesterday basically impacted Australian dollar and New Zealand dollar. So then when we go on to the Forex Heat Map, you can also see the reflection of that as well. With all this bullishness going on. Maybe it's a little bit too early because it's not dark blue. If it is dark blue, that means the trend is really strong. But then you can see Australian dollar and also New Zealand dollar to some extent, it's all blue. If it is light blue or just blue like this means it's fairly bullish. If it is dark red or dark blue, then it's very strongly bearish. If it's dark red, strongly bullish. If it is dark blue, like this one here. So we can see that GBP versus the CAD, GBP is very bullish against the CAD. So this is one of the pairs to look at, not to trade straight away, to look at on your chart. Okay, so now what we need to do is that after we've done a bit of a trend analysis, we need to then go into doing a bit of technical analysis and still check on the trend on your chart. Okay, so here it is hinting us that we have got Australian dollar really, it is bullish against all other currencies at this moment of time, but it's going to pick up its bullishness. So now let's look a little bit on the top movers as well, just to give us an idea of what are the top currencies that are actually concentrated, focused on by majority of traders and investors out there. Now, as you can see from the top 10 itself, the concentration is all on Australia. I mean, not all, but almost all. As you can see, from 1 to 10, you've got Australian dollar here, Australian dollar here, Australian dollar here, here as well, and then here, down here. So you've got, more than probably about 5 or so out of 10. Now, this is giving us a hint that you need to look into Australian dollar pairs as well. Okay, and here we can look at the 4 dots. If you've got 4 dots here, all 4 columns are filled with 4 dots. That means the trend is quite clear on all time frame right here, most time frame, like the 4-hour, the daily, the weekly, and the monthly. So I would pick 3 pairs right here: Australian dollar versus JPY, Australian dollar versus USD, and New Zealand dollar versus the JPY. Okay, and we want to actually concentrate on these 3. And I'm not saying going straight away on your MT4 and then boom, you go and buy them. No, you need to go and analyze them on a technical side. Okay, because after you've done your market analysis, you do your trend analysis, and then you do your technical analysis to help you decide the trend again, and then where you're going to enter, where you're going to put your stop loss and all that through your technical drawings and through your own personal strategies as well, whether it's an EA and various other things. Okay, so once you've picked the right pair and understand which pair or which currencies you could actually match them up with, then you can actually look deeper into the technical side. Okay, so here, for example, it sort of matches with this heat map right here. Now, this heat map, this is the only company, forex.earlywarning.com, that has been existing for the past 14 years, and they don't charge a lot. They only charge, I think it's about only $20 per month for you to have access into this heat map right here. So I've been using it for a very long time, and then I combine it as well with Action Forex as well, and I do both. You know, one I pay for and one I actually get it for free, but it's good for you to combine and not rely on just one, just like that. So here, for example, how do you look at it is that now we are on a European session now. European sessions are opening very soon, so you've got your London opening very soon. You've got Frankfurt market, European markets opening soon, then US later on in a few hours time and all that. So we are looking at this one here. Asian sessions almost finishing already. So we want to look at number one, all these bars. The green bar shows you the volume, the participation, and the trend. So if the green bar is longer and longer like this, as opposed to very short like this, the longer the better, meaning that it has a lot of participation, a lot of volume, a lot of concentration of traders going in buying the AUD. So they are buying the AUD versus the CHF. So all these here are versus the CHF, but then all other currencies are stronger than the CHF. So CHF is really weak here because we can see that it's buying all the other currencies right here on the European session, right? So we want to look at columns and bars that has got mostly stronger bars. Like here, okay, it's not very even. We've got one red bar right here, this one here, one red bar, but this one here is not too bad. We've got more all green, mostly green, but then we've got some longer bars right here. So CHF pairs, a lot of people are selling the CHF at the moment. And also, if you look into JPY, a lot of traders as well are actually selling the JPY because they are buying the other ones, right? So they're buying USD, they're selling the JPY. So all the JPY pairs are selling the JPY and they're selling the CHF. Now, if they are selling the CHF, selling the JPY, that means this is a risk off mode. Okay, so that this is basically means that they are not buying the safe havens. They are not buying the safe havens right here. Okay, they want to be more risky here. So the traders are on a risk off mode, not on a risk on mode. Okay, so here, for example, we've got here on the CHF ones, we've got AUD CHF, CAD CHF giving us a very good bar right here, good size bar, meaning that it's probably got a very good chance for us to look into the chart and make sure that the trend is really clear on AUD CHF and CAD CHF. Okay, so on these ones here, maybe you want to look at AUD JPY as well. Okay, and let's see. If you look at bars like this, we want the bars to be mostly on either the buy side or the sell side. So if you've got more green bars all over here and very, very long, that means that trend is really very clear for that pair, for that mix of pairs. Okay, so like here, for example, I think it's picking up on all the pairs versus the CHF, obviously because we are in the European session as well, but it's a good sign to tell us that we have got a lot of trading opportunities on the buy side on CHF pairs, okay, mainly on CHF pairs right here, because the bars are getting really longer as well, and they've got a lot of volume of trading going in, and also the European session is starting as well. We've got the London Open coming up just in 1 minute time, 10 o'clock my time, which is 8 o'clock in London. So then we are looking at all these pairs here, giving you a good what do you call it, opportunity to look at. Okay, so now let's get to the chart. And here I am using the bkfx.io trading platform. which is a boutique small broker registered license in South Africa. But then I'm liking the ECN type trading with their accounts. So we've got quite a number of traders actually using their trading platform to do that. So it's a boutique small broker, but filled in with lots of professional traders within the broker. So I myself is trading through there and educating traders using their platform. So here, for example, we are looking at AUD JPY. So we've got one very strong, very bullish type currency versus JPY, which a lot of traders are pulling out and selling the JPY at the moment. But let's start off with a bit of a not risk, but trend analysis through this chart first. So we want to do a technical analysis now, but we have to start off, even though we go onto a technical chart, to start off with a trend analysis. So it's quite simple. All we need to do is as usual, I always have three exponential moving averages. I've got my 50, my 100, and my 200 as well. And right now we're looking at the price, 82.65 right here, AUD versus JPY. We start off with the 1 hour chart. And we look at just a little bit on the zoom out side of it. Okay, so in the market, when we did market analysis, a bit of trend analysis, we look at the heat maps and various other things like news and everything else. It is giving us the idea that Australian dollar is on the upside, correct? Then we've got China also data on the upside. So it is favoring the upside for the AUD JPY. But we need to understand whether or not it is upside for us as traders or not. Do we actually start buying now, or do we actually wait and look at other pairs meantime? Okay, so now, for example, it is not buy time for us retail traders at this moment of time. For the banks and the bigger institution, they will already start buying from now on because they can actually afford the very big drops and the corrections and all that, but we cannot afford that. Okay, so what we need to do is to understand the situation that fits us best as retail traders. We want to trade intraday. We want to look at what's going on right now, whether or not it is appropriate for us to really decide on a buy for AUD JPY. So let's look at a trend analysis based on here on the chart itself. Now you can see most of the candles right here are under all the three lines, and these three lines are not very clear, showing us a strong uptrend. These three lines are not moving upwards like a river going up. Like this is a river going up, right? And the candles needs to be above all the three lines. Now on the 4 hour chart, candles are not above all three lines. The three lines are moving upwards, but it's not really giving us a good indication that it is an uptrend for us as retail traders to enter the market now to buy. So AUD JPY is great in terms of its trend to the upside, maybe from medium to long term, but it is not good for us as retail traders to consider buying AUD JPY right now today at this moment of time. But we can always plan when exactly it could actually be our time to actually look at the buying. Okay, so here, for example, if we go on to the daily chart, then it gets a little bit clearer. Okay, so you look at how a beautiful three lines actually moving upwards, and you can see that the candles are actually above all the three lines, especially the current pricing and the current sort of cluster of candles as well. But this is telling us not for us right now. It's on the daily chart. It is actually for the long term that there may be some potential for more movement to the upside. Okay, so if we go and look at 3 minutes or 1 hour, which is our chart, which is us as retail traders, and you want to look at for the short term right now, you can see that it is actually to the downside. It is correcting. It is now correcting now, going lower in terms of price to get ready for traders to buy cheap. Okay, so it needs to go down first, and it is going down right now, and it's got loads of resistance here, and it is actually heading towards the downside on the 30 minutes chart as well as the 1 hour chart. We've got resistance right here, and it is not for us to actually buy right now. Okay, so this is basically one of the biggest thing that we should actually be doing, is to understand when we hear a trend that is up or down and we want to participate and buy and sell, we need to understand whether or not the trend, which is bullish or bearish, fits us as retail traders first. Okay, then we don't enter the market at the wrong time. We need to enter the market the right time, the right trend. Okay, so with that, we can actually start exploring other pairs, for example. So we've got AUD we just looked at. We can actually look at AUD USD as well, NZD JPY as well. So let's look at NZD JPY as well. So I'll start off again the same way on the 1 hour chart, and let's look at whether or not we have got some clear trend. Now on the 1 hour chart itself, straight away you can decide that it's got no clear trend, because you see all the three lines pointing sideways. You see the currencies, the price at the moment is trading in between the lines. Okay, so it's a bit of a sideway at this moment of time. So it's a Monday as well. You need to realize that mostly it takes a little bit more time after the London Open, and usually after the US Open, things start to get a little bit settled, the market, and then the clarity of trends start popping out. Not in the first Asian sessions, usually on a Monday, maybe to trade the Asian currencies possibly, but then it doesn't really have enough volume, or I would say volume to be high enough with good liquidity compared to the London, US, and European Open type session. Okay, so here, for example, not a good sign in terms of trend. There's no trend clarity at the moment for NZD, but of course we hear that NZD is up, Australian dollar is up, but then is it timing for us to buy? So here it start picking up here in the 4 hour chart. So we then know that for us to actually buy and start preparing for NZD JPY, maybe medium term, maybe give it another 1 day, like today, maybe tomorrow or late tonight, early tomorrow onwards, it might actually then start to pick up in terms of clarity of trend, because we do see that this here is actually picking up in terms of the three lines going up. And then the red line, for you guys who are wondering, is the 8 exponential moving averages as an extra line for me to still know the trend only. So I don't use any of these lines to enter the trade, exit the trade, crosses and all that. No, it's purely to give us an indication of trend. That's it. Okay, so here, for example, we can see a little bit of trading above all the three lines right here, but I would say that it's better if it is above even the 8 EMA as well to the upside. Okay, so let's check on the daily chart. Now the daily chart gives us a better indication, telling us that, okay, on the sort of long-term type thing, we've got a better clarity of trend. That means the bigger traders and all that, they may have already parked their buy for the long term. Okay, so they are already creating that trend, and including the weekly chart as well, you can see it's still to the upside. But even on the weekly chart, there seems to be a bit of a limit here. You've got a bit of a, we call it a reversal type candle pattern right here, which gives us a long wick to the upside. So it's not very aggressive in terms of the buying, even by the big boys, because it's already giving a bit of a limit right there. You might want to tease the market a little bit, just to go up and play around this area, go up to this area of resistance right there. But it seems to have a bit of a limit to really buy. So maybe anywhere between 80 to 100 pips, it might want to tease the market a little bit. And then once traders are in, and then loads of buying takes place, and then it might then respect that resistance and drop price all the way down. So that's basically usually how the market operates. Okay, so here, we don't really see very nice entry type, what do you call that? opportunities going on, but I'm just listing down the pairs that you can look at. But in terms of the timing to enter is not really right now. It's for you to rest a little bit, watch the market, and then maybe do some pending orders, but you can start pending orders from tomorrow onwards as opposed to today. So NZD USD on the daily chart, very clear to the upside. On the 1 hour chart, not really, but let's go and look at GBP CAD as well. So if you guys have got some pairs that you guys are already trading, wanting me to look at, to troubleshoot a little bit and see whether or not we can get some ideas of it, you can feel free to give me your pairs and we can analyze it together. Okay, so GBP CAD still the same, not very clear on the 1 hour chart, getting clearer on the 4 hour and also the daily chart. So we've got some clarity happening, about to happen, and on the 1 hour chart, but not just yet. Okay, so this is for GBP CAD. Now, there's been a lot of questions about gold. Now, gold, as you can see, has actually risen a little bit more today, and it is giving a lot of hints to the upside for most of the traders. But on the 1 hour chart, I just want to give you a little bit of a warning. On the gold chart, especially on the 1 hour chart, it seems to be coming up with a reversal candle right there, and the market is just sort of reversing there. But overall, we have been selling the market, myself included, and we have been using this ABCD geometric pattern, and it has been working really well for us for gold for the past couple of weeks on the selling until it got to our D point right here. So we have not really gone on to the buying spree as yet. Because I'm seeing more potential of selling, and you've got another ABCD. A, you can start from here all the way down B, then you got another C right here point, and then as it goes lower, I think it's giving us more selling opportunities for gold. Okay, so you want to analyze the market properly in terms of gold trend, because it's quite unpredictable for gold. Now, it relies a lot on what goes on in the States. So you want to look at what goes on in the States together with the DXY, the USD index as well as the US dollar. Okay, so this is basically the predetermined type factor that goes on in the States, with the dollar, with the political situation, economic, the vaccines, and various other things that actually impacts the dollar, and then that dollar movement then impacts gold trend and movements as well. So here we just want to know whether or not what goes on in the States, whether or not it appears to be risky. If it appears to be risky and then the dollar falls and then more negativity and stuff like that, then you would see the increment in the interest of buying gold increases as well. But at this moment of time, it is from fairly positive to getting more and more positive what goes on in the States with its vaccine, with its couple of things with regards to its economic data as well, and things like that. So don't forget, we are expecting NFP as well, and then NFP is connected to this Wednesday's ADP as well. So you want to look at the ADP and the employment market. You want to look at the wages. You want to look at various other things that are happening before the NFP. So any data that revolves around the economy of the US, you want to collectively look at whether or not they are positive or not. So let's say tomorrow we don't have that, but on Wednesday we do have the ADP and the ISM. They're connected as well. So you've got the index right there, the industrial manufacturing index with the PMI right there, and basically here it's got to do with manufacturing data. So the manufacturing data together with employment. So this one here, if these two are getting to be positive, then most likely you are looking at a positive scenario of the US as a whole, and then it might then impact the dollar to be positive as well. If that actually happens by Wednesday, then you are going to be expecting more gold dropping. And if you look at gold dropping much more, then from Wednesday up to Thursday onwards, then you can actually expect more movement to the upside for US dollar. And then when the non-farm payroll comes up, it's most likely to be a positive number. So you don't concentrate only on NFP, you need to concentrate on all other data as well as a whole. Collectively, if they are majority positive, then it might then impact positivity for the US dollar on the non-farm payroll day on Friday as well. Okay, hope that's clear for you guys. You guys are okay? Any questions, guys? Any questions on your current trade at this moment of time? What's your take on your trades, on your pairs? Any pairs that you would like to share with us today, and we can analyze it together? Everybody's quite shy today. Any questions? No questions? All right, I'll just also share with you on Euro USD because I've noticed that I mean, it's on the news. It looks like they've got more euro selling. Bank of America, I think, has actually predicted more selling on the Euro USD. But then last week there were more positivity regarding the euro. But then because we might be expecting more positivity in the US dollar, I would personally also look into the possibility of euro falling as opposed to euro going up. So with that, I see that we've got a sharp pattern, got a Z-like pattern right here as well. And we are looking at the possibility of prices falling down much more, but then your selling zone basically will be under the 2060. So 2040 can be 1.2040 could potentially be a pending order on the sell, and then you want to take profit at your 2035, 1.2035, maybe about 30 pips or so, 20, 30 pips also on that one there. But then as it falls further, then you're looking at more sell zones right here. This one here is about 40, 50 pips right here from 2010 area right down to 1985, let's say 1.1985. So that could give you some pips right there, but not just yet, because we want to look at how far this actually been taken down. Now, if it takes the prices down and euro keeps falling together with the strength of the US dollar going up, then we are looking at more potential for it to drop beyond this area down here, because I see a bigger sharp pattern right here. This is the mouth of the sharp pattern for this smaller sharp pattern, but this is the mouth of the bigger sharp here. So the bigger sharp basically would aim at a bigger fall beyond this area right here, but it needs to fall first. As you can see, we are on the 4-hour chart, and the candles seem to be quite strong on the bearish side for Euro USD. So we just want to wait a little bit, and then you can do a pending order right now on 1.2040 to sell the Euro USD. Then you want to take profit at 1.2035. Yeah, I think that's the price. So there you go. That's for Euro USD. So usually what happens here, this sharp pattern here is made up of a Z pattern right here as well. So that means that if it does actually fall, this is the back of the shark's head, yeah? So the top of the shark's head. And once it goes down and down and it actually arrives at this area, most likely it will do a bit of a reversal or corrective move. And that corrective move usually could go up to this area right here. And usually it's 50% move of this entire top of the head of the shark. Okay, so that's usually it. So usually one pattern is combined with various other patterns. So within this sharp pattern, you got a Z pattern, and as it moves as well in a lower time frame and all that, you will get ABCD going downwards as well. Okay, so there are various patterns that can be combined to actually trade, to give you a little bit of a map, a route map of what exactly may actually go on or may actually happen. All right. No questions from you guys at all. Any questions, guys, before we end today's session? And I will be coming back with more specific trade ideas as well once I get the market to be, once the market is clearer as well and settle down a little bit more, and I get exact entry exit stop losses, then I'll be doing webinars accordingly to the market's movements as well. Okay, right guys, questions at all on your current trade? We've seen USD CHF last week hits the TP area right there, which is good for the buy. It is continuing to look quite promising in terms of the upward movement for USD CHF. If we go on to the 1 hour chart to begin with, it is reasonably strong. It gives you an idea of the upward type movement for USD CHF on a 1 hour chart. It is really clear on the 4 hour chart as well. So what we can actually do is to analyze a little bit USD CHF before I end the session for today. Just to give you a little bit of an idea, because it's looking quite clear. It's being paired by a currency that is going stronger and stronger, the USD, and a currency that's going weaker to weaker on the CHF. So here, for example, we have got, let's just look at the price that we are in first. We are at 0.9098. So as we proceed further, we've got the psychological price of 9100. So your 9100, you want to mark that area right there, just to give you an idea, 9100 on that. So that could act as a potential resistance zone. So maybe that is where it's weakening a little bit. Let's just look at the daily chart for trend purposes. Not too bad, but we've got a bit of a resistance there from the 200 EMA as well. So you don't want to get too excited with the buying because you've got some risk area. Okay, so 4 hour chart, looking quite strong, got a bit of resistance right there. You want to minimize a little bit. I've just put that red line right there to give you an indication that price could potentially reverse very close or exactly at the psychological level of 9100. So your next 9100 would be your 9120 area as well to look out at, because your 20 psychological number. Okay, 91120. Okay, right. So there you go. So you've got that area right there. Now, if you zoom in a little bit, you've got the two psychological levels put onto that onto your chart, just to tell you that it might reverse there. But then you want to also look to the left. I'm looking at the 4 hour chart. You want to look to the left, and you want to look at whether or not there has been, I mean, close to the current price now, has it been, has there been a very big fall, powerful resistant fall as well? So, I mean, the beginning of a fall. So we can actually just zoom, go to the left a little bit. We don't really see a very big fall beginning at that bottom line right there, or, you know, where the current price is, and then fall all the way down. But we do have a bearish candle right there here, strong bearish single mother candle. We've got some single mother candle there as well, another single mother candle right here, takes it down all the way down here. So that is another area to look at. Maybe potentially it could actually fall from here down to this area right here. That's about 30 pips or so. But it looks like it might want to actually respect some bullish areas as well, because we've got lots of bullish area, and we've got a bullish candle right there, taking price up quite strongly right there. And let's see, and now it's actually just moving to the upside. So what we can then do is to make sure that it pierces through strongly these two lines, which are potentially reversal areas. And once it goes above 120, I think I did that not right, 991, 9100, 9110. So it should actually be, okay, so 91. 0 0, right? So it's correct, 91.20. So yeah, there. So it should actually be there. Okay, so above this 91.20, then we can then be a little bit sure at 91.30 for more upward movement. So then from 91.30 onwards, we want to look at any bullish. We've got a bullish candle right here. So got a single bullish candle right here. Took price from 91.20 area right there. That's about 30 over pips or so. But I would say that we cannot get too excited with the buy, even though it moves up there, because I don't see, I see a lot of resistance as well. And this is where we want to be a little bit careful. Maybe it's not timing yet to actually expect hundreds of pips for the USD CHF, but maybe you can expect smaller ones, 20, 30 pips, 20, 30 pips per time, and then get out and then and re-enter again, so that you don't get caught up in the market for too big a pip. Okay, too big pips expected. So yeah, there you go. So now got some resistance area there. Okay, not a very nice trend line drawn. Yeah, it's a little bit too early, but we've got some picking up momentum for the US dollar crosses. Okay, so this is just to alert you on that, and try to look at the economic calendar as well, and look at what moves the market in terms of the fundamental side of it as well, especially on the economic calendars, economic data releases. All right, guys, no questions. Then we'll end the session for today, and I'll send out this recording as well. Okay. All right, guys. You guys are okay? No questions? Yeah. Okay. If no questions, then we'll end the session for today. And I would like to thank you guys for attending my webinar today. And look at the recording. I'll send out the recording to the groups. Take care, guys. Thank you very much once again, and happy people. Bye-bye.